Good morning, good morning. Today is July the 30th, Tuesday, and I'm here with the bond breakdown. I see some cool stuff happening in the market. The bar that we've been talking about forever is still of consequence as we enter this new week. That bar that was July the 11th, big, huge down bar right here. Not sure if you guys can see it, but we've been looking for closure above 155.03. And we haven't been able to find it. So we're still kind of in a mother bar, inside bar situation. Yesterday was, not yesterday, but the 25th gave us what looked to be a strong move to the upside, like we were going to be able to make it out. And then, of course, the sellers came back in and pushed things back down. And since then, we've had a true mother bar, inside bar situation with the daily chart. I'm on my daily chart now, as you can see. But with the 25th, do I have this right? The 25th being the mother bar. And since then, we've been trying to get above it. So my key levels are still 155.03. I'm still looking at the top of the bar on July 11th. And then, of course, 155.18, 155.19. Those are in play. Our overnight low being 154.19. Overnight high thus far being 155.02. So those are in play. From a daily standpoint, I think that maybe we can get back up here to this 155.19 area, maybe even crack into it. I don't think we'll do all of this business today. That would just be a lot, especially with FOMC starting today. Speaking of that, let's get to some of these announcements, things that are going on today. You know, I love Econo Day for my news. Let's look at Tuesday, July 30th. Today we have FOMC meeting begins. We also have personal income and outlays at 8:30. We have the Red Book at 8:55. The S&P Core Logic Case-Shiller at 9. We have the Consumer Confidence at 10. We have Pending Home Sales Index at 10. We have a 4-week bill announcement at 11. 8-week bill announcement at 11. So hopefully by that time we're done and we're out of the market. You know, I try and get in and get out as quickly as possible with as little friction as possible. Let's also check forex factory. While forex is getting pulled up, let's look at some other things. You know, I love to use this RSI, and one of the things that I check for in the morning with the RSI is where most of the power has belonged to, and obviously most of the power today has belonged to the sellers. To the buyers. We're above the VWAP. We're above the VWAP. We're above the open of the day. We're above the pivot. So these are all key areas that we're above. So, you know, the language that we're speaking today is the language of buyers. We do have some gap action on the 5-minute chart. Check them out. Let's see if I can outline those 5-minute gaps. From 154.27 to 154.30 is a gap. Then we also have right underneath that 154.25, 154.27. Let's make these visible on all charts. So no matter where I'm looking, if I'm looking at a bonds chart, I can easily see. So today's a buyer's day. Buyers have been making gaps to the upside. Let's look at the hourly charts over here. Set up and go to our hourly chart. Looks to be all buyers on the GOMI and all sellers for the ES. You know, I like to use those two tools. I like to use them interchangeably. It might be time to take a trade here soon. Now that I see properties, let's go all charts and apply. updates about to come out on the bonds. Yeah, so today I believe we'll get a good bounce off the VWAP, off the open, maybe even push down below. Yeah, we'll probably push down below maybe the 20 or even to the overnight low, and then recover back up to the upside. As a gap closes here, that top gap as it closes, and, we're in good shape. Okay, that's been the bond breakdown. We're expecting a continuation to the upside. That's my predictions for today. I think that we'll continue to the upside as this day goes on. If I'm wrong, of course, the key levels to watch out for: 155.03, 155.14, 155.18. Those are key levels to the upside. And we'll see exactly how far we can go on this Tuesday. I know it'll be slow because of FOMC, so be careful, trade safe, keep your stops tight. And as we always say, don't be stupid. Don't let the market fool you. Don't let it fool you. All right, guys, take care.